I'm going to talk for the next 20 to 25 minutes or so about Hack and the Hack Fund and why we're doing the Hack Fund as a crypto token launch or crypto asset launch. And frankly, I'm really excited about what it is that we're actually doing. It comes from 10 years of running Hackers and Founders, which is the largest network of tech founders globally. We've had events in over 120 cities. We've had several 100,000 people attend Hackers and Founders events over the last decade. Yes, decade. Our anniversary is actually coming up in about 10 weeks. And it comes from my being on an SEC advisory committee for 2 years, focusing on how small businesses actually raise capital. It also comes from our building a portfolio of 55 companies, helping companies move to Silicon Valley, land in Silicon Valley, and scale their businesses. The vast majority of our portfolio up until now for the past 5 years has been basically equity for services. Startups pay stock into a holding company. We work with those startups. We help them land in Silicon Valley. We help them open offices. We help them find housing. We help them find daycare for their kids, schools, what have you. And we'll help them raise capital. We'll help them do business development, take care of legal, regulatory. How do you do accounting in the United States? All of that stuff is kind of a concierge white glove service that we've actually been offering to our companies for the last 5 years. And it's gone well. We have worked with a portfolio of 55 companies. They're in aggregate worth about $600 million now. They've raised $100 million as a group. And we have a lot of deep experience in helping companies raise money, helping companies from around the globe. We've talked with tens of thousands of entrepreneurs, literally tens of thousands of entrepreneurs over the last 10 years through our events. We've talked to thousands of investors, and we've talked to governments about how we actually help develop startup ecosystems. And all of that experience is leading up to this moment where we are going to fix a handful of the hardest, biggest problems with entrepreneurship and with investing in startups. And what are those problems? In short, the two biggest problems are, how do I raise money for my company if I want to grow my company? Two is, if I'm investing in a company, how do I, in a company that's not on a public stock exchange, how do I make money in those investments? And three, which is kind of a bonus, is who can actually invest in small businesses? And so let's go from the top. How do I raise money for my business in the United States or even anywhere around the globe? Typically what that involves is an entrepreneur will talk to an investor, i.e. a rich person or someone who manages money for rich people, and they will say, hey, I want to do X, Y, Z, and A with my company. I need capital to do this. I'm going to sell you part of my company. I will have stock in my company. I will sell that to you. And when my company becomes a lot more valuable, you will actually make more money. And finding people who are willing to make those investments is actually quite difficult. You tend to have to raise money from angel investors who are rich people. Most of the angel investors that I know of have actually made money by building their own companies. And they understand what capital needs are. The second category of people that invest in companies are essentially venture capitalists, which are really money managers. They go out and they talk with a bunch of rich people, foundations, pension funds, you name it. They say, hey, let me invest your money into the best, the fastest growing entrepreneurs I come across, and we'll make you money. That goes to our second problem, which is, how do investors make money in startups? It's really hard. Investors buy stock into a company, and they buy that stock at a low price. And why do you buy stock? Is because at a low price is because the price is going to be higher. And when you sell it again at a much higher price, you make a profit, right? If you buy stock on a stock market, you want to be the genius that bought Apple at $10 a share, and now it's at, I don't know, millions of dollars a share, whatever Apple price is recently. I'm not sure about that. But you want to be the person that finds that diamond in the rough where you buy the stock price really low and the price of the stock actually goes high. The challenge is that second sale of the stock. I can buy stock in Torrance's fast food shop, and I could buy 10% of his company for $100,000 or what have you. And the promise kind of implicit in Torrance selling me that stock is that I'm going to be able to sell the stock that I own in Torrance's company to somebody else down the road. Where does that happen and when does that happen? 9 times out of 10, what happens is Torrance will sell his company to somebody else. And when that happens, Torrance is going to sell his company to somebody else at a much higher price. And that's when I actually get to sell my stock, my ownership in Torrance's company, at that higher price along with Torrance. And then we both make money, and it's a win-win kind of business model. The biggest problem is if you're going to invest in a company, that company must be sellable to somebody else. When you invest in technology companies, like everybody wants to buy the genius that wrote the check to Google when it was 2 nerds at Stanford thinking about a better way for search for information on the internet. The problem is that you need to be in a place where companies are bought and sold on a regular basis. 85% of the mergers and acquisitions, i.e. companies being bought or sold, 85% of the mergers and acquisitions in the technology industry in the world happen 60 miles from where I'm sitting in San Jose, California. So if you have a technology company that's in Silicon Valley, your chances, you might actually have a decent chance of being able to sell your company. Tends to be a friend of a friend, works for, Google's computer vision and the computer vision department, and I have built some really cool computer vision technology. Google wants the technology, Google wants the team that we're working with, what have you. They're going to buy us for $1 bazillion. Me, myself, my team, we all get rich. My investors get rich because Google bought us at, I don't know, $100 a share, and I sold my stock to my investors at $1 a share. That's how startup investing works. That's how people make money investing into startups. That's pretty much the only way. There is another way, which is when you can have a secondary sale of that stock on a public market. What does that mean? When Torrance's food shop has his IPO on the NASDAQ stock exchange or on the New York Stock Exchange because they're doing $100 million in revenue or more a year, at that point, I can sell my stock that I bought in Torrance's company 10 years ago, 15 years ago. I can sell that stock to anyone who has a stock brokerage account, who's on E-Trade, who's on Ameritrade, what have you. And so that's called the secondary sale, when they actually sell this stock to the public. So the way that people make money investing into startups is you buy stock really low in a company, and then at some point when that company gets sold to somebody else, or when it gets sold on the public market during an IPO, then I can resell that stock at a much higher price, hopefully, and then that's how I make money. I can buy my Ferrari or what have you after that happens. Those are pretty much the only 2 ways that investors make money investing into startups. If Torrance has a really profitable food shack, if he has 10 food shacks, if he grows his business 30% year over year, as an investor, yeah, that's great, but can I sell my stock? Not really, unless someone wants to buy 10 of Torrance's food shacks all at once and wants to acquire the entire business. So that's kind of like catching lightning in a bottle. It's something that happens very rarely. It occasionally happens, but when it happens, wow, it's electrifying, it's huge, it's a massive thing. This means, in the fact that most of the technology companies are bought in and around Silicon Valley, is A, if you're not in Silicon Valley and you're an investor, it's going to be really hard for you to make money investing into that company. Two is if you're an entrepreneur and you're not in Silicon Valley, it's going to be really hard for you to make money or to raise money for your company. Why? Because there's no investors that are going to want to invest or buy part of your company. It does happen. It happens rarely, but the biggest complaint that we have heard at Hackers and Founders over years is, I can't raise money in my hometown of Amsterdam. I can't raise money in my hometown of Buenos Aires, my hometown of Guadalajara, in my hometown of Peoria, Chicago, what have you. There really isn't a market for people selling pieces of their companies or selling all of their companies, which means that 2/3 of all the venture capital in the entire world gets invested in, you know it, Silicon Valley. This is a massive problem. If I have a small business in rural Minnesota, like my father, about the only way he can get money for his small business is to do something with real estate, to build something on a piece of property. He gets a loan out for that piece of property, and then he pays interest on that piece of property, and the piece of property actually improves in value. Well, when that's the only way that people can really raise money for their businesses, what happens? Everybody wants to buy real estate, and then you have bubbles in real estate prices. We've seen all that happen in 2008. And so you're actually at a point now in the United States where entrepreneurship is at an all-time low. That's right. New company starts are at an all-time low right now. And this has huge implications. It's a huge problem for the growth of our economy, for the growth of everywhere else in the world. Silicon Valley is doing great. There's a lot of really wealthy people in Silicon Valley. There's a lot of people making a lot of money, working at really, wealthy companies. But if you're in Peoria, if you're in Chicago, if you're in Buenos Aires, if you're in, Lithuania, if you're in, Africa, it's going to be almost impossible for you to raise money for your company, and it's going to be almost impossible for you to sell your company again to actually raise money. These are the problems that we've been looking at: making money investing in startups and raising money for a startup. And this core problem that we're addressing is the problem of liquidity. When an investor buys stock into a company, that money is frozen until I can sell that stock again. That money gets thawed and becomes liquid and flows again back into my wallet. That is the liquidity problem. For a couple of years at the SEC, when I was on this advisory committee, we looked long and hard at this liquidity problem. And there really isn't a good solution. And what the entire startup investing industry is we expect the entrepreneurs to actually give us as investors liquidity, which makes it a little rough for the entrepreneur, especially if the entrepreneur doesn't want to sell their company. What if you just want to build your company and have it grow? What if Torrance wants to be the food shack, kingpin? Or what if he's happy, growing his food shacks and adding 2 food shacks or 10% new food shacks a year for the next 20 years? Like a company growing 20% year over year, that's a nice little company. Better yet, if it's growing 30% year over year, that's a great company. But investors aren't going to invest in those companies because they can't make money. So the liquidity problem. I've become absolutely convinced that we need to develop liquid venture capital funds. What does that mean? The investors in our fund are going to be able to buy and sell the stock in the fund. It's as if our company or our fund were traded on the NASDAQ and you had an E-Trade account and you could buy stock and sell stock whenever you wanted. This is the core innovation that using blockchain as essentially digital stock certificates gives us. We're going to sell our hack tokens, which is essentially, think about it as hack stock, as a fund stock. You're going to be able to buy these for $1 a piece, or at a discount right now. We are in our pre-sale. And then after we actually have our full our initial coin offering, this stock, our tokens, are going to trade on online exchanges. So if you can go and you can buy Bitcoin, if you can buy Ethereum, if you can buy, ADA, Cardano, or whatever, you're going to be able to go and actually buy and sell our hack tokens online. How in the world are those hack tokens going to increase in value? I'm glad you asked. My job and our job at Hackers and Founders is to find companies that are going to grow very quickly. Right now, a traditional startup investor's job is to find a company that they think that they can flip to Google or flip to Cisco or flip to Facebook for $1 billion or more in less than 10 years. That's the sweet spot of startup investing now. Our job in our liquid venture fund, I don't have to invest in companies to flip them. I can buy companies and I can hold them. Why? Because my investors can buy and sell their positions in my fund at any time. So my job is to find a bunch of technology companies that over the next couple of years, 3, 5, 10 years, I think they're going to grow 30, 50, 100% every single year. And believe you me, after being in the startup ecosystem for a decade, figuring out which company is going to get acquired 10 years from now is almost impossible to do. Figuring out which company is going to grow 30, 50, 100% the next year, the next 2 years, the next 3 years is a lot easier to do. The near future is a lot easier to kind of imagine is going to happen or guess or predict than the future 10 years from now. If you were an investor 10 years ago in Silicon Valley, you might have, the smartphone thing, you weren't really sure if it was going to catch on or not. There was the iPhone, there was the iPod, but this Android thing, I don't know about that one. I had friends 10 years ago who actually said that at events. They didn't think smartphones were going to catch on. Why? Because I like to have a week of battery on my phone and I don't have to do any of that graphics stuff. They were wrong. And that happens a lot. You just guess where technology is going to be in 10 years. You can't predict the future. And this is how traditional startup investing works. It works occasionally, but not all the time. So the core innovation of our fund is that we have to invest in companies that grow quickly. We are going to have a third party value those companies on a regular basis. So it's not me saying that they're worth X, Y, or Z. It'll be someone else saying that they're worth X, Y, or Z. That valuation we are going to audit by a CPA, a public accountant, and they're going to say, yep, Hackers and Founders hasn't screwed with this data. It hasn't screwed with the valuations. This is what the total value of their whole stock portfolio is actually worth. And we're going to do that a couple of times a year. And you, our investors, are going to be able to buy, sell, and trade our stock basically 24/7 on these online exchanges. Now, we have solved how investors are going to be able to make money in investing in startups. You buy stock low, you buy our stock low, you sell our stock when it goes up. We are going to be able to invest in companies anywhere in the world without them having to be in Silicon Valley, without them having to flip their company. Latin America is a really important market for us. Why? I grew up in Latin America. I speak Spanish fluently, and I lived down there the first 14 years of my life. Soy de la raza. And so what happens is Latin America, as a market, is $8 trillion worth of economic activity. The GDP of Latin America is $8 trillion. It's a little bit smaller than China. If you look at the Spanish-speaking world as one market, it's a little bit smaller than China. It only receives, in total, $500 million a year in angel, venture, and private equity combined. That is less than 1/4 of Uber's last investment that it received. One company in Silicon Valley received 4 times more investment than an entire continent did in a year. That's just stupid. This is why poor countries stay poor. This is why people in Silicon Valley get rich. The people who can invest in the companies in Silicon Valley get richer. This is one of, I think, the hardest economic and the biggest economics of our problem. The rich get richer, the middle class, the poor, the entrepreneurs, the hard workers, they don't have a chance to actually try the American dream or the Mexican dream or the Colombian or Argentinian dream. Why? Because they don't have money and they don't have a way to sell their company. We're solving this. If we could actually build together $100 million fund, $100 million would increase the amount of money that gets invested into all of Latin America by 10% per year. That's crazy. You would grow the economy of a continent. You know, I was talking today with a young entrepreneur down in Peru. And he said, you know what, my dream is to have a huge change and to give people jobs. I said, why is that? He said, every time a business gives a person a job, that means that that person's probably supporting 4 family members. You know, maybe they're supporting their husband and 2 or 3 kids, maybe a grandfather. One person supports 4 people. If you can have a company that has 100 jobs, that means you're supporting 400 people. If we can help 100 companies with 100 jobs, then that's 10,000 jobs. That's 40,000 people whose lives are actually improved by helping those 100 companies grow. If we could do a $100 million fund, our goal would be to invest in 300 companies over 4 years. Think about that. 300 companies, how many hundreds of jobs, thousands of jobs, how many tens of thousands of jobs or lives people would be changed that aren't in rich countries, and they would finally be able to actually, you know, put their kids through a good school, they could put their kids to a good college, they can essentially improve their life, improve their family, and we can give the same opportunities to someone in Peru as if they're in Silicon Valley. This is what our fund is doing. We are going to move entire economies. I honestly and firmly believe that this is the future of venture capital. This is the future of startup investing. And as an added bonus, what actually being able to sell these as a hack token means that I don't just have to talk with rich people about investing in our startup, in our fund. If you are not a rich person in the United States, I'm sorry. The law prevents you, the accredited investor rules prevent you from being able to invest in our fund. Anyone else in the rest of the world can invest as low as $20. They can invest $200, they can invest $2 million, whatever you want. My costs are the same, which is really, really close to nothing to actually bring on investors. This is what the beauty of using blockchain does for us. It lets us have a liquid fund. It lets us take investment from anywhere. I want to have 10,000 small investors in this fund because I want 10,000 members of Hackers and Founders to be tweeting, to be retweeting, to be liking news about our portfolio companies. I want our entire community to be able to participate in the upside, in the financial benefit of the startups that are coming from this massive network of entrepreneurs. And this is the opportunity in front of us. It sounds very trite and like a very Silicon Valley show thing to say, but I truly believe that this changes the world. It changes economies. It gives people all over the world opportunity, and we can make a bunch of money doing it at the same time. This is the Hack Fund. This is what we're doing at Hackers and Founders. Why is it hack? Because we're going to hack the economic system. We're hacking venture capital. We're hacking jobs. we're hacking opportunity so that more people can invest, more people can grow their businesses, so that more people around the globe can do better, to have a fairer, better, more prosperous world for all of us. This is what we're doing at Hackers and Founders, and we want you to join us. If you have any questions, I'm going to be here probably for another 5 or 10 minutes. Feel free to ask them in the chat. There's a little button down here. If you move your mouse down, there's a little button down here where you can click and actually go ahead and ask a question. I'll be here, and if there aren't any questions, I'll see you guys in a little bit, but I'll just be hanging out for another couple of minutes to see if any questions pop up. Thank you guys very much, and let's actually do this. Let's kick a little ass together. Cheers. Armando Villaseñor is typing a question in, so we will wait while he actually types that in. Take your time. The question is, to invest tokens, do you need to buy $50,000 worth? No. If you're in the United States, we have something called the accredited investor limitations, which mean you got to be a millionaire before you can invest into a fund like ours. The rules exist ostensibly to protect little old ladies from losing all their money from fraudsters. The problem is, if you look at it a certain way, the laws are essentially telling you that if you're not rich, you're not smart enough to make a good investment decision. I don't like that. I have beef. The only investments that poor people often make are like the lottery. I think that's a problem. I think that we need to let anyone actually make these investments. So anyone in the world can actually invest. If you're in the United States, if you're not an accredited investor, you can't invest legally. I'm really sorry. We do have a couple of slots for friends and family, but those are mostly taken. If you're anywhere else in the world, you can go onto our website. You can go to buy.hf.cx. You can log in. It'll take your photo. You'll ask for your photo ID. We have to do that to comply with international anti-money laundering laws. So we have to have a photo ID. It'll take a couple hours for that ID to get approved. After that, you can go ahead and buy using Ethereum or Bitcoin. We're working very hard to be able to take credit card payments. We can't do that yet. I'm sorry. But anyone can buy, and we've had investors in buy as little as $10 worth, $5 worth. I'm completely fine with that. In fact, I want 10,000 small investors who each invest 10 bucks, 50 bucks, 100 bucks. I don't care. Invest, participate, and let's all do this together. Did that answer your question, Armando? The second question is, how long will the ICO investment window be open? We're in our pre-sales right now. We're actively noodling around on the exact dates. I believe the official ICO is probably going to be March, April, and we'll have it wrapped up by the middle of June. So middle of June at the latest will be the worst. Will be at the latest, and then will actually be available before that. Armando, you know what? Put us your email address, and I'll have Torrance reach out to you, and we can kind of answer any other questions that you actually might have separately. The second question that MC has is, what markets will the token be trading on and when? Great question. We're talking with a number of exchanges right now. We're talking with 3 and 4 in particular. It will not be on exchanges in the United States because of SEC regulations, so we cannot do that. I'm sorry. We're talking with a number of exchanges overseas. We haven't decided exactly which ones. It'll be June before these tokens will actually be able to start trading. But the idea is to have these tokens trading on the exchanges with the highest volume as possible. So we're having a lot of those conversations right now and trying to figure out which ones we should partner with for our launch in June. We haven't released those names yet, unfortunately. So a question from Facebook. Which wallets will support the token? Great question. So we have, our token is ERC20 compatible. So if you have an ERC20 compatible wallet, you can actually go ahead and use it. You got to be careful with Coinbase. You can't use Coinbase because Coinbase wallets aren't ERC20 compatible. What we're actually suggesting to people, if they don't have an Ethereum wallet, to actually set up my Ethereum wallet. And we'll actually put the link to that in our FAQ and instructions on how to do that in our FAQ. But those are the wallets. Any ERC20 compatible wallet will actually work for us. Another question is, if we are a startup, how can we apply to get funded? Great question. Right now, we're accepting applications through AngelList. So what happens when startups apply to us is we've been having this process for a number of years. Just because we want to have as much data and we want to have as much process around it, so it's not just kind of us guessing, and we want to get as much feedback as possible. So step one is you answer a couple of questions. It's just a handful of pages of questions. We try to make it as simple and as helpful as possible. Step two is we have a panel of other entrepreneurs that review and score the answers to your questions. Every application is looked at by anywhere from 3 to 5 entrepreneurs, people that we've worked with. They have upside in our own portfolio. They've invested or they become advisors to us. And they give you a score and written comments on it. So anyone who applies gets a score and written feedback. If the score is high enough, we don't have a set bar right now. We do tell you, you know what, you're moving on to the next step or you're not moving on to the next step. Use this feedback, reapply in a couple months. Second step is you actually talk to some of our investors. So you would talk via video chat like we're doing now for 3 to 5 angel investors over the course of 1 or 2 weeks. The investors score this startup in the United States in our program here based on 2 things. How likely are you to raise $500,000 in Silicon Valley? And how likely are you to do $250,000 in revenue in the next year? Those are the 2 criteria that we actually ask the investors to comment on. The numbers are a little bit lower in Mexico. I believe it's how likely are you to do $100,000 in business or raise $100,000. I need to double check with the Mexico team to be sure that those numbers are absolutely accurate. But it's the same process that we use for our Latin America portfolio as we do the United States, just the numbers are a bit different. You get a score, you get written feedback, and then based on that information, we will sit down with you and we'll find out what is it that you want to do with your company, what kind of company do you want to build, where do you want to go with your life, what is it that you want to do. So much of entrepreneurship is about the founding teams, about the founding members of the company. And then we actually ask, can we help you? You know what, if you're building a photo sharing app so that people can take cat selfies, you know what, great idea. I'm sure it's going to make $1 billion. I don't care. I'm sorry, it's just not something that I'm passionate about. My first startup 10 years ago was, I swear, a website to share cat pictures. It was called cute.com with 3 U's, cute.com. I'm a little kind of burnt out of cat pictures as startup idea. And so I'm not going to be able to help you. Our team isn't going to be really that excited about it. But if we feel like we can help you, if you score well in the first 2 steps, if it feels like a good fit, then we'll actually invest and then you join our Founders Cooperative. So it's this whole suite of services that we actually offer. It's not just money. You kind of join a program and then we're in with you for the life of the company. And that's how we roll. That's how we do it. Right now, we have a team of 18 people in 3 different companies that help support our portfolio, which is higher than pretty much any other fund in Silicon Valley or around the world that I know in terms of that ratio. MC had a second question is there further details regarding the investors, the business plan on the site? What was the URL again? Glad you asked. The URL of the website is HACK.HF.CX. CX stands for Christmas Island. HF stands for Hackers and Founders. So hack.hf.cx. Christmas Island just has a shit ton of 2-letter domain names, and I like typing in hf.cx on my cell phone number, and we want it as short as possible. So on my email address is j@hf.cx. So we're hack@hf.cx. If you want to actually join our Telegram channel and continue the conversation, ask additional conversations there. The address, the URL for that is t.me/hack, HACKvc. So t.me/hackvc, and we can go from there. So I'm here another few minutes if you guys have any other questions. Thank you guys for being a great audience. Thanks for the questions. If you have any additional questions, Telegram channel, t.me/hackvc, or email myself, j@hf.cx, email Torrance, t@hf.cx, Connor, c@hf.cx. There's a pattern. And we'll take it from there and we can continue the conversation. So let's do this, folks. Let's all change how we invest in startups together. And thanks for your time and have a great day. Cheers.